Hi everyone, welcome to another video by Optionables. My name is Saket and today we are going to look at what exactly happened to markets and what we can expect tomorrow. So today there's nothing much to say, it was a complete carnage in Dalal Street. So the market opened almost at the highest point and there was intense sell-off throughout till the end of the day. So Nifty almost opened around 17,500, went up to 17,600 and it was beaten down almost 600 points. That is close to 3% in Nifty. And same case happened with Bank Nifty also. It opened around 37,500, bounced back another 150 points and from there on it was beaten down close to 1,400 points. So it was absolute carnage. So initially when Nifty opened, the selling started in IT stocks. So as soon as it opened, all the IT stocks were down almost 1.5–2% and mid-cap IT stocks were beaten down very badly. And after that, it was shifted to banking. Kotak, ICICI as well as HDFC, all of them saw some severe selling pressure. And finally it was shifted to Reliance, where Reliance also fell close to 4% and we saw entire index close almost close to 3% down. So today was extremely bad and all the sectors ended in red. And especially for the companies which they have paid very high valuations, the new age startups like Paytm, Zomato, Nykaa. So all of them were again beaten down extremely badly. Paytm was down another 5–6%. Nykaa and Zomato lost close to 20% on a single day. If I'm not wrong, Zomato is also below the initial listing day price. So it listed somewhere around 93, but today it is trading around 92 or 91. Mainly, these new age startups are actually seeing a huge correction in valuation. So you can see that all these companies are just making around 1,000–2,000 crores revenue and most of them are loss making, and the loss itself is around 700–800 crore on top of that. In spite of that, their valuation is somewhere around 1.5–2 lakh crore. Whereas on the other hand, you have top companies which are generating revenue of 50,000–70,000 crores and they are still valued less than 1 lakh crore. So obviously these deserve some kind of correction and that is happening right now. So this didn't come as a surprise, as yesterday itself we had discussed about FII selling, as well as we had also discussed about how interest rate in US is going to affect equities in India. So today it again won't be a surprise if FIIs have sold over close to 3,000–4,000 crores, and I hope that DIIs have purchased towards the end because we did see a 1% bounce in the index overall. So it was totally a bloodbath today in Dalal Street. That brings us to our next question, what we can expect from the market tomorrow. If you look at the market, it has mostly been sell on rise. So whenever we are seeing around 100–150 points bounce in Nifty, immediately there is selling. And that too, this time it is not specific selling, it is selling across all the sectors. And that's the reason the sentiment still remains to be negative and there is no news which is actually adding any positivity. So only thing that we can hope for is either the Fed decision or the budget. If that can bring in some positivity, then we can expect the market to bottom out and start bouncing back up. So right now the sentiments are extremely negative and there's a stiff resistance at 17,300. And hopefully 17,000 acts as a pretty good support, because right now 17,000 puts has the highest open interest on the put side. Call side we don't even have to talk. There is some huge open interest across all the strikes, 17,200, 300, 400, all the way up to 18,000. We have some very strong call writing. So that means there is some resistance at higher levels and we can expect people to sell. So right now I don't think it's a good market to buy. But the thing is, you can definitely buy some equities for longer term as the stocks correct, because Bajaj Finance also today fell around 7%, HDFC fell around 3% and so did Reliance. So all these stocks are becoming cheaper and it is pretty good to buy them because these are very strong companies with very good economic moat. So if you're a long-term investor, maybe again you can start accumulating little more. If the market falls further, you can start adding little more. So now what we can expect from Bank Nifty. So Bank Nifty did see some resilience compared to Nifty. Nifty was down around 2.5–3%, whereas Bank Nifty was down around 1.5–2%. So the thing is, Bank Nifty also looks bearish. Even though it is looking slightly stronger than Nifty, it doesn't make it very strong. So it also looks pretty bearish. So what we have to look for is whether Bank Nifty will be able to hold 36,000 and 35,500. So this area of 36,000 to 35,500 is a very strong support zone. So we can expect expect some good buying to come in here. And now coming to resistance, there is a very strong resistance in the range of 37,500 to 38,000. And if you previously remember, 37,500 was a very strong resistance for Bank Nifty, and later it became a good support, and now that has been again broken down, and hence now it will end up acting as a pretty good resistance. So overall the sentiment is negative. It is sell on rise. So whenever the market is shooting up, people will usually tend to sell in such markets, and FIIs are not stopping their selling. So they have almost sold for 12 to 15 sessions now, and that too, the selling has become more severe in the recent days, where they're selling for 2,000, 3,000 odd crores. So, and I don't think how long the DII buying will come. So the one thing what we have to understand, DIIs will only buy if the retail sentiment is positive. So who are the domestic institutions? They are mainly the mutual fund people. So why will you invest in mutual fund? You will only invest in mutual fund if you are positive about the market. So once the retail sentiment starts to fade away, so right now most of the people are bullish. So that's the reason retailers are investing a lot of money. Once this retail sentiment starts to fade away, so then it will be pretty hard for DIIs to support the market as well. If FIIs sell at the same pace, then we can expect the market to crash down faster than what we saw last time. So overall, if you are looking at the market, I do find pretty good support coming in at 16,500 as well as 16,000. And if the market comes to 16,000, I would be really bullish on the market. So hopefully, all of us expect markets to bottom out pretty soon, because all of us would like the market to go up, because everybody will end up creating wealth if so. And finally, again, we have to wait for some trigger for the sentiments to turn. Right now, it doesn't look like the sentiments are going to turn. There is huge amount of call writing. The ratio of calls to puts is almost 2:1. That means there are 2 times more number of calls compared to puts, both in case of Nifty as well as Bank Nifty. That means the sentiment is clearly bearish. And in case if there is some overselling of Nifty, or Nifty enters a oversold zone, and there is huge extension of put call ratio. Right now it's around 0.5. Let's say it becomes 0.3, 0.2. That is overextension. That means there are lot of calls compared to puts. In such cases, what will happen is there will be some bounce back, which will make all the writers cover their call option, and that will push the markets higher. So we still haven't reached that zone where we can tell that market is overextended. So we can just say that the market is right now just bearish. So that will bring us to our next question: what exactly happened to our position? So today we took some intraday trades, and we had some positional trades. So with intraday trades, we did a huge loss. We made a loss of close to 2.5 lakh with intraday trades alone. We actually took intraday trades in 2 phases. In the first phase, we lost around 1.5 lakh. And in the second phase, we lost around 1 lakh. So as soon as we lost 1.5 lakh, we cut our trade and we closed everything. And post that, we took one more trade around 2 o'clock. So again there, the market was extremely volatile and it was very hard to trade. There also we lost 1 more lakh, and we closed our intraday trade with a loss of 2.5 lakh. So along with that, we also lost close to 4 lakh in our positional trade. One short strangle I had already discussed with you regarding Bank Nifty. So there we lost close to 1.5 lakh. On top of that, we had 1,000 quantity of February 24th short strangle, very far away, 35,000 puts and 40,000 calls. But today VIX shot up close to 20%, and you know that the far expiry options tend to gain much faster than closer expiry options. And for this reason, so 35,000 puts gained much faster than 40,000 calls losing, and there we lost close to 2.5 lakh. So overall amounting to close to 4 lakh and plus 2.5 lakh intraday. So our loss came up to close to 6.5 lakh in this day alone, and this is close to 1.5% of our capital. And we finally closed all the trade because we had hit our stop loss of close to 1.5%. So we usually cut when we hit a stop of close to 2%. So this time we decided to cut all the trades, close everything, and start fresh from tomorrow. So that's the reason right now we don't hold any positions in options. We have closed everything, and tomorrow onwards we'll take some fresh positions, and I'll also update this on the community trade as well. And right now the market is pretty volatile and it has become pretty hard to trade. So we'll see what is a good or ideal option to take the trade, or maybe we can keep intraday for next 2 to 3 days, and later as the VIX comes down post budget, we can start taking positional trades also. So right now trading has become extremely challenging, and that's the reason I would recommend you to keep proper stop losses, because one day is enough to put you out of the market. Whatever you have made from the past, say 2-3 months, is irrelevant. One day is good to make all the profits wipe out and put you down to zero, and that's the reason risk management is extremely necessary. Place proper stop losses, and if you're losing more than what you can afford, just cut off your position. There is no need to worry, because these are the times which will definitely pass in maybe 1 or 2 weeks, or in the worst case it might pass in few months, but after that we are definitely going to have a good time, and there is no need to trade in such times and make a huge loss for ourselves. Right? So with this, we also come to the end of this video, where we discussed what happened to the markets today and what we can expect from the markets tomorrow. And I hope that you guys have liked this particular video. If so, then please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining.